Now, I give a net trade call here for 19th of September. You can keep a buy limit order 1.1153 closer to that of the low. Probably they could make around 5:30 GMT a small dip and then rise. And if they make a dip and not come closer to low, then still during the dip around 1.1162 or 63, you can take a buy and keep the hedge order accordingly about 30-40 pips below and keep the target as 1.1238, and you should be able to see that the orders are filled. Then in the case of GBP again, that 1.3009, you can keep the buy limit order. In the event if they don't dip it, you can just keep 10 pips below the market, the buy limit order, and then try to take it. During the late session, 5:30 onwards, they will try to make a small dip before making a rise. At that time, try to pick up a buy position. And 1.3113, you can keep the limit order to exit out of the position. Then in the case of yen, they are expected to make a brief downward stop, and in order to make an upward move in the case of euro and GBP, at that time of downward stop and try to pick up a buy position. And later on, they will gain the level also in the case of USD yen. Then Australian dollar, keep a buy limit order around that of the psychological level 0.7505 or 710 level, and once they just make a small dip, watch how far they are coming down, and then around 5:35-45 GMT try to pick up a buy position, and later on they will try to gain the levels. So watch these trades, try to do it in a demo trading platform, then understand the meaning behind my trade calls. And also I give the hedge order to limit the risk. If the hedging facility is available in our trading platform, keep the hedge order. In the event if the hedge order is filled, then watch for 10 to 30 minutes. The hedging is not making profit. Understand during a brief downward stop and they filled the hedge, and then the hedge is not making profit. So lower level sell, and if you are not making profit, that means you are trapped. That means that they made that dip in order to induce you to go in for a sell position, but subsequently they are not shown any profit. And in such a situation, you watch for about 10 to 30 minutes. Once you become experienced, within 10 minutes you will be able to understand whether the hedge order was filled during a stop end or they intend to make a downward move. If they try to make a downward move, you will be able to see that the hedge order start making profit after in 10 minutes, and that will give an impression to you or an understanding that they wanted to make further downward move before making a rise. So you can keep stop at entry in the buy position, the sell position, or the sell hedge order, and once it is closed, you can keep another hedge order to limit the risk and move it upward until you are able to keep stop at entry in your buy position. Then later on, when they gain the level, you use a trailing stop in profit making position 15 pips away from the market, and also keep the exit order or take profit order at a higher level, so that when they go up and not fill your trailing stop, you'll be able to see that they fill your exit order. That way you can maximize the profit without taking risk. Once the position makes profit, use a trailing stop in a profit making position so that you don't incur any loss in that particular trade. If at all they close it by hitting your trailing stop, you will have a minimal profit. But many of the occasions, what happens when you book profit and subsequently the market moves in your expected direction, invariably that triggers your greed. Similar to that of panicness, your greed can also be triggered, and you wanted to maximize the profit by without keeping the exit limit order. Then what happens? The market goes up and quickly reverse and come down. Then your position start making loss. Then you become helpless. So don't miss the opportunities. So whenever the opportunity comes, you can grab the opportunity not by simply booking profit, by keeping a trailing stop in a profit-making position. So that gives you a smart way of earning money in a risky market.